Good evening. This side Rahul Magan here is a Group Chief Executive Officer, Treasury Consultant. According to BIS, Bank for International Settlement, the daily foreign exchange market, which includes spot, options, and forwards, is approximately 6.5 trillion. And this, as per the triennial survey, which means once in every 3 years, done in 2019. So when the 2022 would complete, probably after 6 months, then the same Bank for International Settlement, BIS, would start another triennial survey, which probably taking some time as they are covering the complete information, and then we need to see where this 6.5 trillion would be. But unfortunately, we are very skewed. I worked as a corporate treasurer, now I'm handling my own treasury. I have seen a very limited, I would say, understanding of the foreign exchange market. In the countries like India, when we speak about ETF, Exchange Traded Fund, it is pretty nimble. Nimble means hardly any market capitalization of listed ETFs. Hardly any market capitalization. Hardly any newspaper, TV anchor, or anyone covering about the exchange traded funds. Hardly. Anyways, to me, these things hardly matter. More than that, we have a concept called exchange traded products, which is shortly known as ETP, exchange traded products. Exchange traded products are those products, those who are listed, but they are structured debt. I know I'm going against the theory, because in theory it is mentioned that they are uncollateralized debt, which is bullshit, because ETPs, exchange traded products, are structured debt. Now, the word structured, which I use, is of two meaning. Number one, it can be collateralized. It cannot be collateralized, or it is not collateralized. But unfortunately, we do not understand that. That's very important thing. The more important thing is that there are very limited countries in the world, just like you have United States and few countries, those who have ETP as a market, exchange traded product as a market. Exchange traded product is basically of three types. Number one, exchange traded notes. Barclays is a leading player in exchange traded notes. I'm not saying that apart from Barclays, we don't have any other player, but yes, Barclays is having a first moving advantage. So Barclays is a leading player in ETNs. We have ETC, exchange traded commodity. We have another ETC, exchange traded currencies. And we have ETS, exchange traded structured products. It means they are very complicated. They are designed for a very specific people. Henceforth, the market size of ETSP, exchange traded structured products, is very skew and limited. So let me repeat, exchange traded products is of three types. Number one, ETN, exchange traded notes. Number 2, ETC, exchange traded commodities and exchange traded currencies. Number 3, ETSP, exchange traded structured product, but they are designed for few people. Henceforth, the size is relatively very, very, very small. Now, when it comes to exchange traded notes, they are generally linked with an equity index, just like we have CBOE, SPX, we have NDX, we have DGIA. There are hundreds of equity related indexes. Some are of Chicago Board of Trade, some are of London Stock Exchange. We have multiple. India also have one, which is India VIX. That's a separate thing, that it is an obsolete index, and I'm planning a detailed video in that regards. Now, if these ETNs provides you the return, these ETNs provide you the return linked with an index. And remember, there is a credit risk. The company who issued the ETN, if this company default, you are gone. If that index perform, you win. If that index do not perform, you simplistically lose the value. This is how the ETN works. Now, when it comes to ETC, exchange traded commodities, you have single commodity structures. Example, aluminum, copper, gold, platinum, nickel, zinc. You have linked with commodity sector. Example, agriculture, energy, grains, livestock and all. And when it comes to exchange traded currencies, it links with currency indexes just like pound sterling, euro, US dollar, Canadian dollar, Australian dollar, New Zealand dollar, Swedish krona and all these. We need to remember that in the markets like United States, there is a heavily traded ETNs. And I would start covering the ETNs very soon on my YouTube network. So guys, remember, you may or might not be an expert in VIX. VIX stands for Volatility Index. You may or might not be an expert in VIX mini futures, VIX options, and various other equity indexes promulgated by Chicago Board of Exchange. Of course, the people sitting in Goldman Sachs, JP Morgan and all these, they are an expert, but you may or might not be an expert. Then how would you track, how would you take an advantage of these is that you have ETNs. But remember, please note carefully before you invest in any ETNs, which is called exchange traded notes, which could link with VIX, which could link with short-term future index, which could link with the rolling 90-day, 93-day implied volatility, which could link with a correlation matrix, which could link with a volatility arbitrage structure. Do remember that you read the document thoroughly and carefully. Because if you're not reading that and you're just signing it, it means you are inviting trouble. More importantly, understand that how the portfolio is rebalanced. So example, Barclays VSX is taking 2 consecutive rolling shorts in the Standard & Poor VIX index. And unfortunately, you know what is performance. So understanding of that product is very key. So probably you might not have the money to take a direct position in these products, but if you understand these products very well, then you can take an exposure in these products. Probably more ETN related videos would be on the card. Now this is Rahul Magan.